Today we're going to talk about why equity markets have bounced back and what they'll be focusing on towards the end of this week. In August, we've seen a noticeable increase in volatility across financial markets with large daily moves, both positive and negative, which has been somewhat unsettling for investors. Now, the first week of the month was where we saw the most noticeable declines across equity markets, and this was quite broad ranging, but we also saw strength in global government bonds. So for multi-asset investors, that diversification paid off. But it was really jitters around the US economy, that it was tipping into recession, that was one of the triggers for the sell-off, but also that we saw an incremental increase in interest rates in Japan, which led to a stronger currency and weaker stock market, but also an unwind of what is known as the carry trade. So if we look at the main market in the US, in the first week it was down 6%. However, over the next 2 weeks, we've seen it all but recover and more. So the US market now only stands just over 1% below its all-time high. So a significant recovery, and just shows that in times when you have volatility spike, it pays to just be patient and really take confidence in the active management and diversification that we offer at True Potential. So why have equity markets really bounced back over the last 2 weeks? Well, it's really evidence that suggests that the US economy is still strong. Consumers are still spending at a healthy pace. We've also seen the evidence that the labour markets are perhaps stronger than initially thought, and that businesses in aggregate are reporting better than expected corporate earnings results. In addition, inflation continues to trend very well, and it's giving confidence that the Federal Reserve will be able to cut interest rates in September. We've actually heard from some of the Federal Reserve, the US central bank's members or policymakers that are in charge of changing interest rates, and they've agreed that given the progress on inflation and employment, it does suggest that cutting interest rates in the near future is appropriate. So given all that, the question now is for markets whether the interest rate cuts will be 0.25% or 0.5% in September. So markets will now be focusing on Friday, where we'll hear from the chair of the Federal Reserve, Powell, who will be giving his latest comments at the World event at Jackson Hole, where global leaders, policymakers will be gathering, and Powell will be setting out what's his latest view on inflation, the softness that we've seen in employment markets, and what that may mean for future interest rates. So we'll keep you up to date on that on Monday. Thank you for watching, and we'll see you tomorrow.